Okay, on this video, we're going to be talking about Fibonacci retracement and how you could utilize that in your trading every day. So pretty much Fibonacci retracement is the level of retracement that the market makes after a big move, either a big move as far as an uptrend or a downtrend. Um, that move has to actually be one move, just like one push, pretty much. It can't be a consolidated market. That's not how you could utilize this tool right here. Okay, so pretty much to actually get to the Fibonacci retracement tool, you have to go on your TradingView and click this icon right here. And it's going to be right here, Fibonacci retracement. Okay, so you click it. If you want to open it up. So these all right here are the percentages level of retracement that I'm going to show you guys how to use. And let me just show you guys, make sure you guys have the same format as me. So you right click on it, click format, and make sure you have these numbers right here. So I'm going to leave this screen up for like about 30 seconds. And then just make sure you have all these tools right here that's checked off. Okay? Okay, so you should be good now. The main ones that weren't there before is, I think it was 78.6 and 88.6 weren't checked off, mainly, from what I remember. Okay? So how to actually use this right here. And when I say push, I mean like one push. Like see how this right here is an uptrend and then it pulled back? This uptrend right here would have been just like one push to the upside. All right? If it was going down, then pretty much you'll be using like this right here, like it goes down, all right? And it went back up. So this is like one move. This right here is one move. This right here could be like just one move. Um, this right here, one move. You know what I'm saying? So like always has to be one move towards what you're trying to see the level of retracement for. Okay? So how to actually pinpoint the Fibonacci retracement tool is basically on an uptrend, you do it from the relative low to the relative high, that one move, down here to right here. On a downtrend, like for instance, like right here, you do it from the high to the low. And that's going to give you the retracement level for this point right here. Okay? So the main points that you focus on as far as the level of retracement, it's a few that you got to really focus on. So the points of major retracement are 38.2, 61.8%, 78.6%, and at times 88.6%. Okay? 127 max at times in certain occasions, but mainly it's focused on the 38.2, the 61.8, 78.6, and 88.6. Okay? So pretty much if a market is rejected at the 38.2 mark, now let me go on a big screen before we start anything. Okay, so this is green. Okay, so this is going to give you a real good insight on certain things also. So if the market is pushing up, right, and it retraces at 38.2, normally it gives you like a dramatic spike back down, right? It's very hard, very strong, very volatile push back to the downside, right? As it goes up to 61.8, that push is more slow, all right? So it's more aggressive towards the lower retracement levels in the market. As it goes up to 78.6, it's even more slow. It's even more slow. And 88.6 is just beyond slow. It's like a long-term type thing. Okay? But the main one that's very aggressive is the 38.2. If it retraces at 38.2 and goes the opposite direction, it's a strong push. So just be careful of that also. Once it breaks the 38.2 mark, the next level of retracement that you should be looking for is 61.8 and so on. Okay? Hang on. Okay. So let me show you guys how to use this right now. So for instance, you see this uptrend, right? This strong push to the upside. So what you will do and everything is pretty much bring out your Fibonacci tools, low to the high, and see where the market retraced at, 38.2. What happened? It just shot up dramatically. All right, that's at 38.2. That, like I told you earlier, that's the main point that you'll be looking for like a really aggressive move. Beyond that, it's going to be very, very slow. If you retrace at 61.8, it will be a very, very slow move back to the upside. Seeing that this right here is on an uptrend, meaning that you have higher highs. Okay. Another example right here would be, let's say if I bring from right here, high to the low. What happened right here? The market came up. Where did it retrace at? 61.8. That's like the golden number right there, 61.8. As you can see, it shot back down to the downside, very, very slow. It wasn't as aggressive as this right here, but slowly it went down, creating lower lows. Lower lows. Okay. And you could use this in your everyday trading style, honestly. Always do it from a high to a low. Let's watch and move. Okay. Right here, wow. It retraced up to 100% and then dropped. So that right there was tragic, seeing that this right here is resistance as well also. So you could combine this with support and resistance as well. Just make sure you focus on the primary numbers, the 38.2, 61.8, 78.6, and 88.6. And you could spot these points of reversal in the market. Just make sure you're doing everything correctly. Make sure you're doing it actually pinpointing the high and the low correctly, so you can actually see the high points and the low points of the market. Shit. High to the low. So this right here pretty much stopped at 50%. 50%, it doesn't really happen all too much often. It could probably still go back on the upside up to like 61.8, seeing that this is on an uptrend also. So just beware of that. But overall, that was how to use the Fibonacci tool and how to use the PRZ zones to your advantage. Okay, guys, so see you guys on the next video.